Anyway, okay, so our company is called Short Sale Services, and we've been doing this, goodness gracious, probably 12 years, so maybe 13 years. It's exclusively what we do. We've seen some highs, some lows, some steadies, and I think we're getting ready for the highs again. Goodness, I hate to take advantage of other people's bad issue timing, but it seems like we are about to hit a period where short sales are going to heat up again. Did we lose Curtis?
It looks like we did, but I'll let him back in when he comes back.
Okay. Anyway, so everyone knows what the short sale is. I mean, I think at this point, it basically is when you owe more than the value of the property. And it doesn't matter whether it's $1 or $1 million. A short is a short is a short. So, and it's based on the net. So even though you might sell the property for 200,000 and they owe 200,000, after closing costs and everything else, you're only going to net 170-ish, paying commissions and transfer fees and everything else. Therefore, you're short, not because of sales price, but because of the net. So when you do your net sheet, that's what you base whether they're short or not. And generally, most of the times, a client will know whether they're short or not, even before you do the valuation. What you have to be careful of, and what we're seeing a lot of, is people have done these modifications, whether they did them in the last couple of years or just recently, where where banks are adding the arrearage to the back end, and they do it as additional mortgage, and people forget that that's now owed. So we probably get 4 or 5 a month of new deals where files are ready to go to closing, and then the title company either got a payoff or did the title search and saw that the homeowner did a modification very recently or within the last year or so, and instead of owing 200, they owe 260, and therefore the property is now short. So as a result, I would encourage you to, you might want to look into that and get in touch with me. I can check the title if you have any suspicions that they might be short. Ask the seller if they've done a modification recently, or if they have a payoff statement. So once we know that they're short, we start working with them to start working on them to get their financial package in order. And we will handle all that. We don't expect you to do that. So we will get their email address from you, and I'll reach out to them by phone, introduce myself, and then our company will start working them to get the financials. Included are bank statements, tax returns, pay stubs, a hardship letter, a monthly budget. That's probably it. If it's an estate, it's a little bit less because we obviously don't need pay stubs and things like that. If it's a reverse mortgage, we need the same amount of documents, but they're much easier to do. So that's how we would handle getting the documents. We don't want you to be collecting the documents. We want to get involved early on so you can focus on selling the property. The questions you're going to be asked and I'm going to be asked are, should I continue making my payments? And I always we want to always say that they should do what they can do. We can't force them to make their payments if they don't have the money to make them, but we tell them that it's their obligation to make their payments. If they can make the payment, they should. If they can't, they shouldn't. But they should always do their best. In truth of the matter is, by making the payments, they're not getting any benefit towards a short sale because they're still going to be short. So, but we're not permitted to tell them not to make their payments. Curtis, you're back. Okay. So how long does a short sale take? Now, some of you may have had experience with me where they take shorter or longer. I generally say it's 75 to 90 days from the date of contract. So it's not the date that you get the listing, it's the date of contract. Because that's when while we've already submitted all the financials to the bank, we don't really submit the offer. We can't submit the offer until the bank has all the contract. So once you have a contract, that's when we think the 75 to 90 days start. Some of the banks, because of COVID, have been running a little slower. Some are running a little bit faster because they've just sold off some loans. That's what we're saying. Obviously, if there's a second mortgage, it might take a little bit longer. The bank's going to look at the net price. So they're going to start with the gross. So they're not going to want you to give away the property. They're going to do what's called a BPO. Everybody know what a BPO is? Broker's price opinion. Basically, it's a poor man's appraisal. And what they're going to do is they're going to send somebody out to the property to say, we think it's worth $250,000. Hopefully they're going to go in and do an internal, and it's up to you. I would strongly suggest you meet them at the property with masks, safe distancing. But the reason is we don't want to get stuck with a bad valuation. The BPO agent's going to try to get in and get out very quickly because they're only making $60 or whatever they might be making. So they're not going to spend a lot of time at the property. So if we can get you to meet them at the property and show them that over there, there's holes in the wall, the appliances are gone, there's mold in the basement, there's power lines in the backyard, there's a bus stop out front where people gather, there's a crack house next door. Any of the things that might depreciate or cause the value of the property to go down and cause you frustration in selling the property, we want the BPO agent to know so that they will ultimately give you a good value, in this case, the lower value. Because if they give you a $300,000 value on a property that you know you can only sell to $250,000, you and I are going to be spending 3 months fighting to get that valuation down. We may or may not win. Any questions about that? None? Okay. So what are the consequences of a short sale? So the first thing is they're probably not going to be able to buy a new house for 2 years, 2 to 3 years. Usually it's not really an issue because they don't want to buy a new house. But if they do want to buy a house, it's probably going to be 2 to 2.5 years before they can get a new home, assuming they paid their other bills. Their credit will go down about 80 to 90 points. Not terrible. It's not a permanent mark. Their credit will start going up when they pay their car payment, their Visa, and everything else. So it starts going up. So within a year, if they've paid everything, their credit usually goes back to where it was, as opposed to a bankruptcy or foreclosure, which takes substantially longer. The tax consequences. So there's pretty simple law on tax consequences, even though it's changed a few times in the while I've been doing this. The law generally says if Curtis owes me $1, and I say, Curtis, forget the $1, you don't have to pay me. You've been a good friend. In theory, I'm supposed to give Curtis a 1099, and he's going to have a 1099 showing he has $1 worth of income, and thus would pay the tax. If he made $50,000 this year, he now made $50,001, and he pays the extra 15 cents in tax. So if Bank of America forgives Mrs. Jones of $100,000, she has to pay, she's going to get a 1099 for $100,000, adding to her income, and probably pay an additional $25,000 to $30,000 worth of tax. Now, that's not really the case because there's something in the tax code called insolvency. If Mrs. Jones is insolvent at the time of the transaction, the 1099 does not need to be reported, even though she'll still get it. So insolvency means at the time of the transaction, your debts, your negative things are greater than your assets. So since the largest item that most people have are their house, if their house is underwater, they're probably going to be insolvent. So the short answer is don't let the tax consequences fool you. Don't let them scare you or the homeowner away. Generally, they're not going to be paying taxes on that money. And I will explain them to them when I talk to them in case they have concerns about it. While we're not their tax accountant or their tax lawyer, I will explain the law to them and I will have them list out their assets and liabilities so we can see if they're really going to be affected. But like I said, most people that do a short sale are not affected by the taxes. So our ultimate goal is to get a deficiency waiver. What that means is we want Bank of America or Wells Fargo to send me a letter or the homeowner a letter that says, "Dear Mrs. Jones, we're going to let you owe us $350,000. You can execute that sale with Curtis Price for $250,000, netting us $220,000. And since you owed us 350, we are going to waive that $130,000, and we are not going to pursue that deficiency." And we want that magic language. Generally, we will get that magic language that they're not going to waive, that they are going to waive the deficiency. The times we're not going to get it is when the lender is a credit union. When the lender is a credit union, they will generally say, "Okay, we're going to let you do the short sale. We're going to release the lien. You're going to owe us 100,000. We want you to sign a $30,000 promissory note. We want you to sign a $30,000 promissory note." And we'll fight for the best terms. I just did one yesterday where they owed 100,000 difference. The bank took 30,000 credit, and it was Navy Federal. They took $30,000 at 2% for 15 years. Not terrible. It was $160 some a month. It's unsecured. So if you don't pay, they can sue you, but there's no assets they can come after. Any questions about any of that? But let me, before there isn't, if there are any questions, I will set the bar with the customer early on. So if I know their bank is Penn Federal Credit Union or NASA or government employees or any of those, I will tell them there's a likelihood that the bank will pursue some type of promissory note. So that's not a surprise to them. Okay? Any questions? Come on, somebody. Am I putting everybody to sleep? Okay.
I'm just driving, Alan.
Okay. Be careful.
Yeah.
And I'm listening. I'm enjoying it.
Okay.
Yeah, and I'm just trying to take it all in. This is
Okay. So let's.
probably the third time I'm hearing this and
All
still
right.
trying to
Third
get it.
time's the dream. So you may have heard of relocation funds, and this is where the internet is really dangerous because the homeowners will Google short sales. My neighbor got relocation funds. What does that mean? So what that means is the bank will give through the government well, let's back up. It used to be through the government. The bank was giving $10,000 to anybody that did a short sale through the government program. So they got released of their lien, they sold their property, and they walked away from closing with $10,000. I mean, goodness gracious, what could be better, right? So I'm going to give you a magic date, January of 2017. Think about what happened in January 2017. We changed presidents. So not to make this political, but in January 2017, that law went away. And that 10,000 no longer is available. I keep getting these pop-ups. That law is no longer a law. It's no longer a law. So now it's a negotiation with the banks. So we asked the bank on every deal for $10,000 for our seller, and we are seeing between 0 and 5,000. And there's no rhyme or reason to it. And I wish there was. So we asked for 10, and we're seeing between 0 and 5. And the bizarre reason is, I mean, the way this works is we might have a homeowner that has lost her husband, that is in the middle of chemotherapy, and is $100,000 upside down, has no income coming in other than Social Security, and needs the 10,000 to go rent a house. And we ask the bank for it, and they say no. No explanation. It's just no. At the same time, we might have a homeowner who his income went from 250,000 to 180,000 and can no longer afford his house, but can still live a nice life. And the bank might give them $10,000. So there's no rhyme or reason to it. And it's like I said, we'll ask for 10,000 on every deal. The only thing you need to remember is don't assure people they're going to get it. So don't say, hey, if you work with us and you work with Alan, you're going to get $10,000, because that's not the case. And there's an agent in Laurel, I'm sure more than one, but one that I know of, that got called in front of the board and got fined because he was sending out these postcards that said, get relocation money if you use us. Don't do that. Okay? All right. The bank is going to look at what basically they're looking at the hardship, the seller's ability to pay, and the value of the property. And what we're finding is they're looking less to the financials than they are to the value of the property. So obviously, if someone has $100,000 in cash in the bank, they're not going to allow a short sale if they're only short $15,000. But most of the people that come to us do not have substantial assets, liquid assets. They might be able to afford it, but for whatever reason, they lost their job. They want to get rid of the property. They want to move. They want to retire. So the bank is generally going to say, as long as we can sell it and get a fair price for it, we're generally going to allow the short sale. We are not really seeing issues with that. What we're seeing is banks fighting us on values. So that's why when I talked about earlier, the BPO being so important. We're also seeing problems with homeowners associations. That is, I'd say it's probably our biggest obstacle to getting deals closed. And what I mean by that is whether it's $200 a month or $200 a year, some people just stop paying their HOA. And those fees accumulate really quickly. I had one guy yesterday, he hadn't paid his January of 2020, so almost a year now. It was $420 for the year. He now owed $1,800. Legal fees, collection, filing fees with the court, interest. And he said, I'll pay it. And I said, it's $1,800. He goes, how can it be $1,800? I only owe him $400 and some dollars. And so that's where it happens. Now you think about like a condo association where it might be $260, $300 a month. All of a sudden it's $5,000, $6,000 a year for 2 or 3 years. All of a sudden it's $20,000. So that's where we're running into the biggest battles. So the law in Maryland is if a bank forecloses, they only have to pay 3 months to the condo association. So they might get, if it's $300 a month, they might get $900 if there's a foreclosure. But if there's a short sale, they are in theory entitled to, they hold all the cards. They can say, we want it all, and tell the bank either foreclose or pay us. So that's where the negotiation comes in. So we might go to them and say, hey, the bank's going to give you $1,000. You owe $10,000. We can, between all the parties, we can come up with $4,000. Will you take it? And that's where the fight comes in. And guess where they always look? To your commissions. Because they say, wait a minute, if Curtis and Patrice are making $10,000, $12,000 on a $400,000 property, we know that they'd be happy to make $10,000. So have them throw $2,000 in the pot. So then I go to you guys and I say, I've been fighting with them for a month. Do you want to throw in $1,000 each? Do you want to throw in $2,000? How do we want to make this work? And that's the way it works. And and it's a dirty, dirty, dirty business. So if you can get your homeowner to pay their condo or HOA fees, that's much more important than them paying their mortgage. Because the mortgage I can negotiate. It's the HOA and condo fees where we run into problems.
Hey, Alan, I have a quick question.
Yeah, sure.
So with that being said, is it if we do have the listing for the short sale, would it behoove us as the listing agent to go ahead and list the property at that 3.5 commission for the listing side and then 2.5 for the buying side, knowing that I'm probably going to take that 1% hit, or you know what I mean?
Yes, absolutely, Curtis. You're 100% right. I've been telling Jasmine, and hopefully she's told you, list at 3.5, because even if
Right.
you're not required to pay anything at closing, which hopefully you won't, and our goal is for you not, of course, there's always going to be more work. There's going to be um, holding the seller's hand through the process. I'm going to call you and say, excuse me, Curtis, Mrs. Jones is not getting me her bank statement. Can you run over there and get it? Because it's holding up the deal. You know, I need you to go do the BPO. Call Mrs. Jones and tell her to send me her tax return. Whatever it might be, there's going to be more work for you. And then when we get to closing, there's going to be HOA. There's going to be a water bill. You know, unbeknownst to me, and I don't really want to know about it, you might have to help her $500 to help her move. I mean, it's always going to be something. So yes, if you can get the 3.5% and list it at 3.5%, I think 80% of our deals, we have 3.5% to the listing agent. And if you sell it to somebody you know, or if someone in your office sells it, you can switch it. You can go 2.5. I'm switching to 3 and 3. You can always negotiate it at closing. But yeah, go 3.5. Good question. Okay.
Thank you.
And we're generally seeing 6% commissions. Once in a while, we'll see 5, but generally we're seeing 6. And where we're seeing 5, it's when the same brokerage might have both sides. And again, it's usually they'll give 6, but once in a while, if the numbers are really close, or it's a private lender, if it's owned by a pension fund in China, you know, they might say we only pay 5% commission. So, and you can understand the banks are saying, you know, we're taking a big loss here. You know, we want everybody to share in this loss. So even though you got 3%, 6% commission, let's cut you to 5 and we'll cut our losses a little bit. We fight like crazy. That doesn't happen. And generally it doesn't, but it does once in a while. Okay, so like I said, we want to get involved as early as possible. It makes your life easier. We're involved. So the question is, how do you get them? How do you get the listings? And they're becoming more prevalent, even though September was just a really slow month. August was really busy. September slowed down. We're projecting October, November, December to be really busy based on what I'm about to show you. But the reason we're in a little bit of a strange pattern right now is because a lot of people during the pandemic, they got modifications or waivers to pay for those 3 or 4 months, which has turned out to be like 9 months. But the banks can now pursue. So if Mrs. Jones couldn't pay in February, March, and April, starting in August, they went to her and said, hey, you now owe us 5 months. She went, wait, I don't know 5 months. And they went, well, then we need to work out a payment plan or not. So people have sat in their homes and not heard from their mortgage companies. And therefore the short sales have slowed down a bit, but now they're starting to hear saying, hey, Mrs. Jones, we need to get you back on track or we're going to start foreclosure proceedings. So that's where what I'm about to show you will become more prevalent. And I don't know if some of you have sat through this or not, but I'll show you in a second. But Maryland has what's called notice of sale provision. A notice of sale is the first step along the way before a bank can foreclose. So they have to send a notice. The bank has to send a notice that says, hey, Mrs. Jones, you are in default. Now remember, you can be in default on the first day of the next month or 7 months. They don't have to send it immediately. It might take them 7 months to send it. But on the 1st of October, if you didn't make September payment, you are in default. And in theory, they can send that notice of default out and then start foreclosure. Now, they might not do it. It might take them 6 months to get around to you, but in theory, they can do that. So the beauty of the state of Maryland is that when they do a notice of default, it's public record. They have to file it with the state of Maryland in the this Department of Assessments and Taxation in the State Department. So therefore, it is a source for you to find leads. Everybody follow me? Has anybody done this before on Realty Track? No.
I have.
You have
Patrice,
Did it work?
yeah, yes,
It did work?
yes. I used to have a membership with Realty Track to send out letters and stuff.
Okay, so now you can do it. I don't know if you had a separate membership, but now you can do it through Bright.
Yes.
Okay, so if I can figure out how to share my screen. Can you see screen 2 there?
I can't.
No?
At
Yeah.
the bottom of your screen, and you click the share button,
I did.
and then you click desktop.
It says screen 2. Oh, there it is in share. Now can you see it?
Okay,
Yes.
yes.
Okay, there it is. Okay, good. So I'm in Realty Track. Okay, and let me show you how I got to Realty Track. Sorry. So, oh, darn, what I did. Let me do it again. Sorry. Okay. So when you go into search on your Bright, and it'll say, let me get out of this. You go into search. Okay, go into search and I say residential. No, that's not what I did. Hold on, I'm sorry. Okay, click search and you go into where it says free add-ons and it says foreclosures right there. Continue to Realty Track. Okay, everybody with me?
Yes.
If you're not watching, if you're driving or anything, you're obviously not seeing this. And when you get to Realty Track, I typed in, for example, you can put in any zip code, but I'm putting in Prince George's County, Maryland, right here.
Mhm.
And then I only want to see pre-foreclosures. I don't want to see auctions, and I don't want to see bank owned. So I got listing type, pre-foreclosures in Prince George's County. And then I go to search. And for some reason, it took me to auctions, and I'm going to unclick auctions because I don't want to see auction properties, and I don't want to see properties that already went to foreclosure. And now if you see the top, I'm in Prince George's County pre-foreclosures. Everybody see that?
Yes.
If you're
Yes.
watching. Otherwise, you can ask someone in your office to show you. So there are 97 properties now that are in Prince George's County that have been that are in pre-foreclosure. So if you're looking for a short sale, what you want to do is see which one of these properties have negative equity. So if we go to the first one, it's a Newbie Avenue. It's worth $298. And that means they have equity of $235,000. So that's not a good one. But if we go down to Cable Hollow Way right here, it says it's a $217,000 property approximately, and they're negative $159,000. So that means they owe $370,000 on a $217,000 property. So that means they can't refinance. The bank's not going to do a modification. That means they are, out of luck. So that's a perfect candidate for you all to reach out to and say, hey, Mrs. Jones, I'm sorry you're going through this, but we can help you. Does that make sense?
Yeah.
Yes.
Okay, because there's nothing else they can do. And the one below that, Alcona, is $22,000 upside down. Oregon Avenue's $200,000 upside down. Atwell's 37,000, and it just keeps going on and on and on and on. And so you see that here's one, Lenaskin Lane in District Heights, it's $400,000 upside down. Now, what the heck are they going to do other than sell the property, let it foreclose, or do a short sale? You have no other options. We agree?
Yeah. Okay.
So
Yes.
see how I got to those, that list?
Yes. So
Yes.
you're saying that if there's a negative in front of the number where it says equity slash LTV, then that's how far upside down they are. If there's no negative in front of the number, then that would be a standard sale.
Yeah, unless it's close. Like, because again, these are only estimated values.
Right.
So let's find one that that's close. Okay, like this one, Chestnut Grove Lane.
Mm-hmm.
It says estimated value $510,000, and it says equity of $6,000. So that means, now I wonder if that really is worth $510,000. I'm just going to look in Zillow real quick. Bear with me 1 second, just to get an approximate value. So this is saying, Zillow says worth $500,000. So that means they owe right around $500,000. So that would be a perfect one to call, because if they sold it for the full $500,000 after commissions and after closing costs, they're going to net $440,000. So even though they have a little equity, they're not going to have enough money to pay off the lender.
Right.
Now, so that would be one I would call. So there's 197 in Prince George's County alone. And remember, there was none as of August 1st. So these are only, probably mid-August is when they were allowed to start again. So these are all really new. I mean, everything I'm looking on here is as of September 27th, September 1st. Let me go back a bit. And then you see these were September 30th. So these were older before they had to stop. Yeah, these were old. So I would hit anything like that up. And then I will send you, and maybe you've seen it before, but I'll email you what our marketing campaign is, how to send them letters. We send them letters. It's a 3-prong marketing plan that says, "Hey, Mrs. Jones, sorry you're going through this. Good things happen to bad people. We're not here to take your house from you or to do anything. Let's look at some options." And of course, you already know there are no options. So we send them 3 letters over a 3-week period of time. And we send it out in a like a bizarre color, like we pick like a red or a green. I've done them in the green or the purple or yellow, just something so that they'll notice us and remember us. So during June and July, when I had a lot of time on my hands, as they're all of us, I started sending them out, and I got like 2% return. But most of the people I spoke to didn't want to go forward because the bank wasn't breathing hard on them right now. So they were like, "Yeah, we're okay. We'll get back to you if the bank starts bothering us." So my timing was a little off, but I think if you pick a zip code or pick an area, you can get really specific. Like, what's a zip code near your office that you all like to market to?
I'm primarily Laurel, so I'd be 20707 or 20708.
Okay, so we know that okay, so I put in 20707 and there are 7 pre-foreclosures in 20707. So there's one on, hold on, let me just turn. So there's one on Cypress Street in Laurel that's $35,000 underwater on a $200,000 property.
Mm.
So no, there's several, but but that's just 20707. 7
Right.
properties just there. Let's put in what's Upper Marlboro? 20.
20772 or 20774.
Okay, so 772. There are 7 in that community. 20774. There are 17
Hmm.
in that community. So just looking at them, just looking. I mean, on the first page, there's 3 or 4 that are way under negative equity. Castlewood Drive, 60,000. So there are a bunch. So I encourage you to use that marketing, and I'll send Jasmine again. I know she has it, but I'll send her the marketing plan you can use. And then once you know that you're going to have an appointment with somebody, or reach out to me. I can tell you what liens are on the property, what the status of the foreclosure is, and how far down the road everything is. So when you talk to them, you're ahead of the game because you have all the information.
Cool. Just wanted to remind folks, if they don't remember, that your campaign, or the one that you sent most recently, I believe, is in Broker Mint. Is that right, Damaris?
It probably is because I've sent it to Jasmine.
Yes, it is. It is.
Okay.
Okay, so if you go in there, you'll see it. And honestly, I mean, it's a pain in the neck. I mean, it really is, but it works, especially in times right now where people are, I mean, I don't know if you've seen it, but I think people are starting to get a little frightened. I mean, school teachers or government workers, well, I guess that's not, people that worked in the certain industries that have lost their jobs or were laid off for 3 months and can't catch up. I mean, banks have not been beating down their door real hard, but they're going to start.
Yeah. So,
And
Alan,
yeah.
I'm sorry.
No, please.
From your experience, when you're doing these campaigns, how long does it take between the time that you start the campaign to after you've done the 3-pronged approach? How long does it usually take for people to reach back to you?
Well, unfortunately, a lot of them don't reach out. They're going to require you. So the 3rd letter says, hey, Mrs. Jones, I've sent you 2 letters in this crazy purple stationery, so you know who I am. I think we should talk. So I'm going to be in your neighborhood on Saturday at 2 o'clock. I'll plan on stopping by. And that's where you have to be comfortable visiting or doing door knocking, as you call it. Now, of course, if you can find their number, that's the best scenario, though most people don't answer their landlines right now or ever. So, that's the disadvantage with no landlines any longer. If you guys have the ability to find, I don't know if there's a way to find cell phones, but we find that generally if they'll call you, great. And sometimes they will, especially if you don't come across, because remember, they're getting, this information is public information. So they're getting it from Remax and Keller Williams and Exit. But a lot of those agencies are sending out postcards that say, call me, I'll list your house, which is a complete turnoff. Your letters, if you look at the marketing campaign, it says, hey, bad stuff's happening right now, we can help you. And then you can talk to them about modification, which doesn't work. And you can get me on the phone and I can talk to them about it, and I can give them options. And even if they do a modification, you'll get a call back in 3 months when they're ready to sell because modifications don't work. I mean, it's the one thing I can promise you is the modifications in 95% of the cases do not work. Even though the bank might be willing to give it, because they have to stay current for 3 months and to get into the modification. And then once they default, even if they stay current for 3 months, once they default on the higher payment, they're done. So then the foreclosure moves quickly. So, I always tell people, I say one of the things I tell Mrs. Jones when I do have the privilege of talking to her is, Mrs. Jones, you and your husband make $140,000 between you. You're 3 months behind on your mortgage. Your mortgage is $2,200 a month. You don't have the $7,000 to bring it current. What makes you think you're going to do it? Get the money, A. And even if you did, you're $60,000 underwater. Why not sell your property, get out from under this, get Bank of America off your back, go rent in a community where you're comfortable for a couple of years. And then if you want to move forward and buy something in a couple of years, Patrice and Dee and Curtis, they can help you. And we've done, and Jasmine and I have been doing short sales for years. She's done full circle. So she's done the short sale, she's found them a rental, and then she's helped them buy a new house. So one customer brought her 3 transactions.
Wow, nice.
Yeah. So,
Hey, Alan,
yeah.
the quick question. I know that the marketing material, the 3 letters, I'm familiar with that, but I know that I think the last time we had you on, you mentioned about like not like a flyer, but another document that when we do door knock, that we have something that had, information about, I guess, the short sale process. Or I thought that you had another outside of the actual letters, another like a handout or a flyer that we could bring.
I don't, but I can certainly, I'm not sure. I can create one that kind of that's more of a, that summarizes the short sales versus their other options.
Okay.
I could do that and I'll send it over to you guys.
Okay, that's good.
Maybe the one thing you need to do is wear a face mask when you knock on their door.
Oh yeah. Yeah.
Now,
I have one that says, "Do you want to buy a house?"
Really good, Curtis.
Yeah.
Very subtle.
I've actually gotten some response where some people have been like, "Well, I'm not ready to buy a house." And I even had to remember, I was like, "Why are you telling me that?" And I was like, "Oh, because my mask says, do you want to buy a house?" And I was like, "Well, whenever you're ready, here's my card."
Well, here's my face mask. Maybe you need to put your phone number and your email on a face mask and start giving them out.
Yeah.
That's a
There you
good
go.
idea. Yeah, I was just thinking that. That's a good idea.
So, I mean, if I've talked to Jasmine about, maybe bringing someone in to do to do this plan for you guys. I should talk to her again about it because it does take a lot of time. I mean, I'm not gonna lie. Bring in like an intern that can because it's kind of just grunt work. So if you don't, but I will tell you that there's an agent who I know that was struggling along as a really, transaction here and a transaction there. And he actually works for Keller Williams. And if anybody knows the Keller Williams, they have this, what do they call it? The certain time of the day that you allocate to calling all your
Yeah.
contacts. I forgot what they
Time
call it.
blocking.
What is it?
Time blocking.
Something like that. But anyway, this person was the most diligent time blocker I've ever seen in my life. I mean, I couldn't do it if my life depended on it. But he would allow from 10 to 2 or 10, I'm sorry, like 10 to 12 every day. He would just do these letters. And he has become one of the top agents in Baltimore as a result of it. And we probably closed 3 deals, short sales a month for him. And he's now got people doing it with him, and he's got a team. But his entire practice business is basically short sales and doing this marketing campaign. And you're very lucky in the state of Maryland, notice of sales are, your marketing campaign is there for you. Now, Jasmine called me a week or so ago and asked me about how do you find this in Virginia? And I unfortunately had to tell her Virginia doesn't do it. So
Oh.
Virginia, there's no list like this out there.
So,
We're in DC.
so wait, Alan, you were saying notice of sale, and I must have missed it before. There is a way for you to see this particular list, or are you talking about what we find in Realty Track?
Yeah, what you find in Realty Track, that's the list.
Okay.
That's what the lender has to file when they're like in the pre-foreclosure stage.
Okay.
So everybody that's on this list on the page I shared, we know that they have missed one or more mortgage payments and are, the lender, they're on the radar of the lender, the lender's ready to pounce and start the foreclosure process. And now we know that some of them have no options because they're upside down. So we know they can't refinance. And now the question is, if you have a $500,000 mortgage and you've missed a payment or two, probably means your payment's probably $3,000 a month. Do you have $6,000 or $8,000 sitting in the bank ready to bring your mortgage current? And I would tend to say most people don't. Just so you know, and I've only say this for point of reference, and I'm not judging anybody because everybody's doing their best. But when I talk to people, one of the first questions I ask them is, do you have any substantial cash in the bank? Because if you do, on a side note, if they do, the bank's going to look to that. So if someone's I think I used this example a few minutes ago. If someone's $100,000 short or $20,000 short, and they have $150,000 liquid, the bank's going to say, go to your account, pull out $20,000, and let's just be done with this. So I always ask people, do you have any substantial cash? And some people define substantial cash as $2,000. I mean, people are living paycheck to paycheck, God bless them, but they maybe can save $200 a week or a month, and they have $2,000. They think that is substantial cash. And again, not judging anybody, but the bank's not going to come after them for their $2,000 cash. And I would tend to tell you that most of the people I've dealt with in the past 12 or so years, if they have $10,000 in liquid, that is way more than the average. I mean, most people just don't have it. So, when the kids get braces or the car breaks down, they're in trouble. So now they're 2 or 3 months behind on their mortgage. They can't get caught up. So that's where the letters come in and say, hey, Alan Wiener has once been in your position. We know that bad things happen to people. We're going to help you. Let's see if there's other options. I'm going to have you talk to some people. Let's look into it. Let's see if there's options. Whoops. The only option is let's sell your house. But you know what? I'm going to get you in a great rental in the same neighborhood so your kids can go to the same school. And then in 2 years, we're going to buy a property and you're going to buy it at 2.5% interest rates, because that's what the interest rates are now, and as opposed to the 6% rate you're at when you bought. And where we're really seeing this is in, let me go back for a second. What's the zip code in like Mitchellville and the expensive homes over there?
20721.
20721.
Or 20716 is another one for
Let's
that.
try 20721. So there are 21 in 20721.
Ooh.
So I just pulled up the first one I'm looking at is an $869,000 property with $209,000 underwater. Another one. Now remember, people bought those properties in 2004 and 3 and 5 and 6 when they were really expensive, right? I mean, if you guys knew the area back then, Mitchellville, that community, it's a beautiful community and people were paying a lot of money, and unfortunately they've gone down in value. And a lot of them had 10-year interest only payments because people could only get in on interest only loans. and the loan officer said to them, "Don't worry, we'll get you in. And in 2 years, 4 years, you'll refinance you because it'll go up in value." Well, we hit the 2006 time and things went down, not up. So they couldn't refinance. So they're still in these crappy interest only loans, or maybe they're in a 10-year loan that's being called. So that's that community. What was the second zip code you said? 20 what?
716.
So there's only 2 there. Is that a small? It must be a smaller market community.
Maybe.
I'm just going to put in.
The
Mitchellville,
other
Maryland. I'm just putting it in. Let's see what it comes up with.
Mitchellville.
Mitchellville. Is that more Bowie? Wouldn't you call it Bowie?
20716. I guess that's on the, people use whatever
Okay. So
city name.
for example,
Yeah,
in
it's
Bowie,
Bowie. It's called Bowie as
okay,
well,
in
just
Bowie,
like
there's
20721.
there's 10 pre-foreclosures.
Uh-huh.
And of that, real quick. So there's one minus 92,000 on Del Castle Court. It's a $500,000 property, $92,000 underwater.
Uh-huh.
So they're out there.
Yeah. Lanham's
Okay, so I'm going to put together, as Curtis requests, like just a 1-page like marketing piece, and I'll send it over to you guys. And then please call me with any questions.
Well, I have one.
Okay, sure, Darlene.
I waited. So basically, I just got notified. That's why I kept going in and out of the call. That I have a buyer who had a contract, and it's an estate sale, and I just found out that they did the title search and now talking about doing a short sale. So
Okay.
how is that going to?
Well, you need to have the seller needs to, or the seller and the seller's agent, the listing agent need to, I don't know if you were here when I talked about this earlier on. We're finding out a lot of people have done modifications and they don't even know about it. So they're getting close to closing and they find out that they're upside down, and that's
Yeah,
probably
this is an estate sale. Yeah.
okay. So
Mhm.
you need to have someone from the seller side has to start handling as a short sale. And
Yeah,
we'll be glad to do it. There's no fee to the seller.
Right. She's working on it.
Who's the seller's agent doing it themselves?
I'm sorry. No, I'm assuming, well, she's going to call me back. She says she has a short sale service that she's working with.
Okay, well,
So,
if you want to suggest us, we'll be glad to work with her together. And
I
again,
did.
There's no fee there's no fee, by the way. I don't know if I said that early on. Our fees are paid by the bank. So there's no fee to us. So it's not
Okay.
going to come out of commission or cost the buyer or seller any money.
Mhm.
So now the question, Darlene, is your buyer willing to wait what's probably going to be 60 days?
Well, yeah, like I said, I just found out. So she's going to call me back, and then I'm going to have to relay that to the buyer.
Well, if you want to get me on the phone with them, and so I can at least ask the right questions, whether they use me or not, but I can help
Okay.
you understand. My cell is 301
Okay. 301
785
785. Okay.
8111.
Okay.
And I'll be around all afternoon.
Okay.
Okay.
So when she calls me back, yes, I'll do a conference call. Okay.
All right. I'll be around. Any other
All right.
questions?
Thank you, Alan.
Alan,
Yeah,
a quick question. So this list on Realty Track, does that work in DC?
it does. No,
Okay.
I'm sorry. It does not. No,
Does it?
DC doesn't have notice of sales either.
Okay.
Nope.
That's actually a great thing to know about Realty Track. I never really fully understood how to use it. So now to know that I can go in, because I've gone in there before. I had a client who she was looking for foreclosures. So I went in there to search for some, but I've never looked at it from this point of view of seeing.
Yeah, it's a great resource in Maryland. It really is. It's wonderful. They do half the work for us.
Yeah.
In the old days, you have to go to the courthouse and you know, if people wanted to buy lists, they'd have to go buy lists from marketing companies, et cetera. But now it's there.
Wow. Well, thank you. Thank you.
Thank
for-
you. I'll put together the one pager that kind of summarizes everything and we'll go from there. All right. Darlene,
Thank
call me if
you.
you need me. Everyone else, call me anytime. Good luck to you and stay safe.
All right,
Thank you,
so, yeah,
Alan.
thank you. Thank you,
Bye-bye. Have a
Alan.
good day.
Thank you.